Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we're celebrating today. We celebrate every day on Ron Siegel Radio. What are we celebrating today? National Middle Child Day. That one there is a challenging one, but as I've said many, many times, let's see if maybe.
It is what it is.
Yeah. I've got a middle child, so I understand it well. There's also, now I can't say this one without it bringing back some very, very fond memories. Josh, you and I go back long enough. We'll remember this National Vinyl Record Day. Our buddy Jay Kaplan, may he rest in peace. He had a massive collection of vinyl records. We remember Jay fondly all the time, but National Vinyl Record Day. And, you can't go wrong. National Julienne Fries Day. Now, Jay and I would go out and get meals all the time. Julienne fries, though, that one looks pretty good. I've beaten anorexia, and Julienne fries. Well, I will admit that some people may believe that I'm a little oversized. I don't think I have to tell anybody that, but started taking what's that, Monjoro. It's Monjorno, or whatever it is. Not nearly as hungry as I was. So if I go out for those Julienne fries, maybe just a couple or three of them, and then I'm good. So we'll see how that works long term for me. We'll check it out. Let's take a look and see what the markets are doing today. Dow Jones Industrial Average, it's been all over the place. So it was up, it's been down. Right now it's down 44. The S&P 500 is up almost 15. NASDAQ is up 94. Oil is up $1.81 a barrel. $1.81 a barrel as we wait for more problems in the Middle East. As Joe Biden tells us that Donald Trump will be a national security risk. Compared to where we are now, maybe just a risk might be good instead of actually being there. Unbelievable. But let's see what's going on with gasoline prices. Do we want to talk about gasoline prices? Well, we have to, because we are in the state of confusion right here. I just saw this over the weekend. I can't figure this out. Maybe somebody can help me. As we record this right now, and yes, I know nothing ever goes away when it's on the internet, and we're on the internet. But they're talking now about the 2028 Olympics in Los Angeles being car-free. Now, how do we go from where we are right now to car-free? Can anybody help me with this? I mean, we've got millions of cars on the road every day. Every venue we go to has tons of cars, tons of parking. We don't do a whole lot in public transportation, not very safe on the public transportation, not because of the services itself, but just because it is what it is. Yet we're going to go to a car-free environment for the Olympics by 2028. That'll be an interesting one. Let's take a look at well, maybe the state can help with their budget deficit then, because we're looking at that deficit and we're seeing, okay, national average of a gallon of gasoline throughout the United States, $3.44 a gallon. Right here in the formerly Golden State, $4.60 a gallon, $4.60 here. Ow! Now, I know that those numbers are for the entire state, and there are areas that really, really do skew those numbers. But if it's anywhere close to that, I think last week I paid somewhere in the high threes is what I did. I think I paid for regular gasoline. Yes, I go to Costco, but Josh over there, $3.94, probably figure a half a dollar less is what we usually think about for Nevada. Oh, yeah. Oh, wait. We got to back up. I think, something I did have this here, an effect here, but I'll find it. It is something relative. Oh, there it is. Yeah, we're stopping right there. Record scratch. So Josh just laughs at me when I put these on. So, you think about this, and we've got these. If you go to the AAA website, you see that all the states in the union that have and where their gas prices are. They color the states based on which one of the quartiles they're in, or they break out the states into, I guess there's 5 different sections. So that would mean the top 10. Nevada is in the top 10 at $3.94 statewide. We'll just use that number for now, even though we know it's a little overstated. California is $4.60 a gallon, the highest priced state in the union, Hawaii. So even though we're all in the top 10, $4.60 at California, and California says, yeah, you got to wait, that they're gouging us. Now, why would they be gouging California when we have probably the highest usage of gasoline, more demand than any, supply and demand, we're talking about that. Mississippi, $2.95 a gallon. So there's probably 48 states, maybe 49 states. I didn't look at all of them, but there's probably 49 states that have gasoline prices cheaper than California. 48 states, cheaper than California. And they're gouging only us. Does that make any sense to anybody? Or is it just, once again, our governor giving us a bunch of malarkey? Now, I did finally see something on the weekend. I don't know, maybe you saw this one too. The governor, they finally found something that I think the governor is well qualified for. I saw him out picking up trash over the weekend. He was cleaning up some homeless encampments. I think that if we can keep him doing that, we might be in good shape. We might be able to salvage the state, because everything else he does causes us a lot of problems, but that's a whole different issue. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, I'm going to talk to you. Why is it that one of the largest home sellers in America is now paying their buyer's agents, 8% commission? Do you think they're doing that because they like it, or do you think they're doing that because it's good business? We'll talk about it. We'll talk about that and a lot more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217 037.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Let's take a look and see what mortgage rates did on Friday. Good morning, Bobby Joe. Glad to have you with us. Let's see what the mortgage rates did on Friday. 30-year conventional loans locked 6.5%. 30-year jumbo loans locked 6.775%. FHA loans 30-year locked 6.349%. 30-year VA loans locked 5.93%. Best loan on the market for our veterans who don't want to put any money down. And the USDA loan, that's generally no down payment in the rural areas, 6.32%. All of those were down on Friday. We'll see what happens today. We never know what the day will bring. But remember, those are the actual locked rates. Those are not, they don't tell us APR, points paid, points received. They just give us the locked rate. That's what you're going to put in your mortgage calculator. If you don't have one, ronismylender.com, ronismylender.com. We've got a great mobile app. And if you want to apply, you can do it on there as well. But you can see what rates are doing. You can play with payments, all of that. If you want our commentary each morning on what the markets are doing and what our thoughts are, rsrmarketminute.com, rsrmarketminute.com. You can check that out as well. Free of charge to you. But let's see what's going on in the markets this morning as we check out this bright and sunny day. Let's see where we are. We've got the, let's go back and we'll take a look as we always do at the S&P 500. Now it's up 11.5 points. We'll look and see the 10-year Treasury down 2 basis points, 3.92 we'll call it. I'm not going to go into all the decimals. And we've got the mortgage-backed securities. Those are up 6 basis points. Remember, as we share with you all the time, when the bond goes up, rates go down. When you're up 6 basis points, it really doesn't mean a whole heck of a lot. So we're not going to even get too excited about that. But what are we watching today to see what's going on in the market? Well, let's take a look. Once again, we've our Federal Reserve. And you know my thinking about what's going on with the Federal Reserve for a significantly long time.
Such an idiot.
Yeah.
Such an idiot.
That's right. That's my thoughts about the Federal Reserve. Some people don't share that thought. It is mine. Fed Governor and voting member Michelle Bowman spoke over the weekend and showed how out of touch she is with the economy. Of course, she's not an economist. 19 members of the Fed, 12 of them vote, and they're dealing with monetary policy and economics and looking at inflation and unemployment. Yet we've got non-economists making some of these decisions. Worse, we've got an attorney making these decisions.
I got a bad feeling about this.
Absolutely. Here's some of the comments, notable thoughts from her commentary. PCE and PCE core at 2.5% and 2.6% respectively are uncomfortably high above their 2% goal. Let's think about that one. Well, where were we? We were at, of course, under the Biden administration and Biden and Harris administration. We were up over 9%. Now we're looking at these numbers, and they're at 2.5, 2.6. Think we're doing pretty good there, Michelle. Maybe you ought to check that one out. Oh, no, we're going to wait until it's at 2, and we know that there's always a lag, so why would we want to get ahead of this? Inflation has made a lot of progress, and the current readings are not that far above their target. Additionally, the trajectory is lower. Unemployment rate, while higher, is still historically low at 4.3%. Well, Ms. Bowman, let's think about this one. So she misses it here again, as it's not necessarily about absolute level of unemployment, but rather the relative change. It has risen 0.9% from the cycle low in April 2023 at 3.4. Let's see, 0.9, 3.4. So are we saying that that's up about 30%? Since 1948, anytime we've seen the unemployment rate rise by this amount, we have seen a recession 100% of the time. Are you listening, Ms. Bowman? The unemployment rate, while higher, is still historically low at 4.3. Unemployment rate is overstating the weakness in the labor market. She tries to say the unemployment rate is overstating the cooling of the labor market, but then goes on to say that QCEW census data shows that the BLS has been overstating the job growth by a large sum. Where have we heard that one before?
Surprise, surprise, surprise.
If anything, the unemployment rate is likely understating the weakness in the labor market. She directly contradicts herself with this statement. Next one. Housing data in the BLS jobs report is less accurate because of response rates. It's true that the response rate in both the Bureau business and household surveys have fallen, but the business survey, where the headline jobs figures come from, has seen a massive decline from the national 60% to 43%. Meanwhile, the household survey, where the unemployment rate comes from, has fallen but still remains at 70%. The household survey is also much better at capturing inflection points in the labor market, which we are clearly seeing. Housing services, that's shelter. Inflation may rise because of immigration. Bowman is missing that rental prices have and should continue to moderate for several reasons. Seasonally, we always see them moderated at this time. There is a record amount of multifamily units being completed and vacant multifamily units being completed. Vacancy rates have risen sharply higher. Additionally, there is a massive lag from when shelter rises or falls and when it is reflected in the inflation reports. This is why the Fed waiting too long to hike rates in 2021 and why they're behind the curve right now. Even if we saw shelter costs rise right now, it would be delayed by about 18 months before it showed up in the CPI and the PCE, although we think that shelter costs will fall, not rise. To that point on rent, Zillow just released their observed rent index, showing that rents rose 0.4% in June, moderating from 0.6% in May. Year-over-year rental increases are at 3.4%, well below the 5.2% increase in CPI. This still has a lot of catching up to do, and it appears we have finally turned the corner in shelter and should see it be easier to make progress on inflation. Unemployment rate was impacted by Hurricane Beryl, and it's temporary. The BLS has clearly stated that Hurricane Beryl had no discernible effect on the national employment and unemployment data for July, unquote. Unbelievable she didn't know these things. Further supporting this is the fact that job sectors that we be impacted by leisure and leisure hospitality both saw job increases, not decreases. Interesting to see Fed members like Bowman continue to think that the Fed needs to be cautious on cutting rates, especially when looking at the Fed's own statement back in March. At the March meeting earlier this year, the Fed released their summary of economic projections, which showed that they believed the unemployment rate would reach 4% this year, and the core PCE would be at 2.6. With those projections, the Fed forecasted 75 basis points of cuts this year. Fast forward to today, the unemployment rate is at 4.3, above their 4% projection. And core PCE is at 2.6. The unemployment rate is much weaker than projected. Inflation is where they expected. So why would the Fed not be cutting rates by at least 75 basis points this year? Producer Price Index is coming out tomorrow morning. That's going to be the start of some of the inflation numbers that we're going to see. We'll be watching that one for you as well this year. Headline is expected to, this year-over-year headline is expected to decrease from 2.6 to 2.3, while the core is expected to decelerate from 3 to 2.7 if these numbers are reported as expected. It should be bond friendly. That means rates should get a little bit better. Therefore, if we see some friendly PPI numbers tomorrow, it bodes well for the PCE report, which is released on August 30th. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So I think we're going to go a break a little early, Josh, because I know we're going to need some extra time to discuss our thought of the day, or our plan for the day. Why is one of America's largest home sellers offering an 8% buyer's agent commission? Now, there's going to be a big change in the way buyer's agents are paid, the way the market is able to demonstrate these things. All has to do with in the weeds stuff. The National Association of Realtors and the Department of Justice came to a stupid settlement, which is going to make things more difficult, less transparent. But I digress. Why is one of America's largest home sellers offering an 8% buyer's agent commission? Means a lot. You're going to be, if you want to get some information, make sure you get ready for this. We've put together a whole presentation for you. rsrlinks.com/salesmax. rsrlinks.com/salesmax. We go through it in depth there, but when we come back, we're going to talk about that. We've also got some other stories we're going to share with you. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Mortgage rates down a full % from recent highs. Mortgage rates have been one of the hottest topics in the housing market lately because of their impact on affordability. And if you're someone who's looking to make a move, you've probably been waiting eagerly for rates to come down for that very reason. Well, if the past few weeks are any indication, you may be getting your wish. Mortgage rates trend down in recent weeks is what we've been talking about. There's big news for rates after the latest reports on the economy, inflation, and unemployment rate. The Federal Reserve's recent comments, mortgage rates started dropping a bit. And according to Freddie Mac, they're now at a level we haven't seen since February. To help show the downward trend, check out the graph. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, or if you're watching, any of our socials, Josh has it up there for you. Maybe you're seeing this and wondering if you should ride the wave and see how low they'll go. If that's the case, here's some important perspective. Remember, the record low rates from the pandemic are a thing of the past. If you're holding out hope to see a 3% mortgage rate again, you're waiting for something experts agree won't happen. Greg McBride, chief financial analyst at Bankrate, says, quote, the hopes for lower interest rates need the reality check that lower doesn't mean we're going back to 3% mortgage rates. The best we may be able to hope for over the next year is 5.5% to 6%, unquote. And with the decrease in recent weeks, you've got a big opportunity in front of you now. It may not be, it may be enough for you to want to jump back in. The relationship between rates and demand, if you wait for mortgage rates to drop further, you might find yourself dealing with more competition as other buyers reignite their home searches too. In the housing market, there's generally a relationship between mortgage rates and buyer demand. Typically, the higher rates are, the lower buyer demand is. But when rates start to come down, things change. Buyers who are on the fence over higher rates will resume their searches. Here's what that means for you. As a recent article from Bankrate says, quote, if you're ready to buy, now might be the time to strike. Home prices have been rising primarily because of a long-standing shortage of homes for sale. That's unlikely to change. And if mortgage rates do fall below 6%, it's possible buyers would enter the market en masse, further pushing up prices and resurrecting bidding wars, unquote. Bottom line, if you've been waiting to make your move, the recent downward trend in mortgage rates may be enough to get you off the sidelines. Rates have hit their lowest point in months, and that gives you the opportunity to jump back in before others do too. If you're ready and able to start the process, give us a call at 800-306-1990, 800-306-1990. We are ready to help you. Remember, if you're thinking of refinancing, we've talked about this one as well. What's your number? What's your number? We've talked about that. Then there's a prior broadcast of Ron Siegel Radio. But what I mean by what's your number is, what is it that you want to save in dollars, not percentages, to restructure or redo your home loan? Now, there's going to be a big, big boom of people coming into the market. And do you want the best rate at the beginning of the down cycle, which is where we are now, or the lowest rate through the down cycle? Well, if you don't know what your number is, how much you want to save, how do you know these things? It's kind of like going to a mall, which I do not do, and saying, well, where is Nordstrom? Well, it doesn't matter. If you don't know where you are, how are you going to find it? You got to know where you are, where you want to go, and then we put a plan in place to get you there. That is our whole thought process on this. So that, again, is the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. RSR Money helps you find out exactly what your home value is. There's 4 different tools on there giving you valuations. But let's chat a little bit about why one of America's largest home sellers is offering an 8% buyer's commission. That would be D.R. Horton. They are a builder. Think about that part. So they've got their own staff that they have there working, and then they're going to also pay for somebody to go and there's salespeople to bring them extra folks. Why do you think they would do that? And I hear this all the time. This one just baffles me. So I get folks that'll tell me they're thrilled because the agent that they're interviewing is offering to list their house at 4% or 5%. And they're hoping that they're going to be able to do a double ending the listing. So let's digress. What does double ending mean? Well, it means the sales agent, the listing agent, thinks that they're going to be able to find a buyer, so they're going to get paid both the buyer's commission and the seller's commission. Okay, I'm not a big fan of that. I'll tell you why. It's because for the most part, not always, but for the most part, when somebody lists a house with an agent, who is the agent responsible to? Who is their duties to? Who do they have a contract with? They've got a contract with the seller. If, heaven forbid, you were to get a DUI, would you ask the district attorney to represent you in court? No, it's too big of there's too much at stake. If you're getting a divorce, would you ask your spouse's divorce attorney or family lawyer to represent you? No, too much at stake. Yet when you go to buy a house, probably your largest asset, maybe your largest liability with the mortgage, you're going to have the same person represent you that's representing the other side. They may or may not be good. I don't know. I don't know them, but they may or may not be good. But how do you represent both sides and give the absolute best to both? So if you're the buyer, you want to go and hire your own buyer's agent. Now, there's something going on the 17th of this month. I know that that's coming up. You may or may not have heard this, but the National Association of Realtors was sued and found guilty in a lawsuit based on what they agreed to, not what was asked, but what they agreed to and offered The buyer's agent commission is no longer going to be negotiated by the seller's agent. It could be offered, but it doesn't have to be. And it cannot be publicized in a National Association of Realtor member or California Association of Realtor member IDX feed. IDX feed is what they send out to the website Zillow and Redfin and Realtor. That's what's used for syndicating. They can't list the buyer's agent commission in there as of the 17th of the month per the agreement. There are some agencies that are not going to participate with the agreement, but that's a whole other story. But why would D.R. Horton say we're going to pay the buyer's agent 8%? Well, it's simple. What do they know? They've got inventory they want to sell. They don't want to reduce the price because that hurts them down the road in the future with the next phases. So they say, okay, we're gonna give a big benefit, a big bonus to the buyer's agent. We're gonna pay them 8% to find a buyer for the properties. Now, right now, this is being done in the Florida market. I don't think it's being done any other market, but maybe that's just because that's where they've got inventory. Maybe that's where they've got the most inventory available. But we've been talking about this on Ron Siegel Radio and from our friend Beef Wellington, the Career Compass, for a long time. If you're listing your property, list it with an agent that understands the 7% technique. And again, if you want to understand that, we show you several methods of getting the most money for your property. rsrlinks.com/salesmax. rsrlinks.com/salesmax. We put together we did a broadcast on that at a Borrow Smart segment, but rsrlinks.com/salesmax, we show you if an agent is double ending it, all they have is their own marketing, and they might be some real good marketers. I know an agent that is very, very good who's quoting a 4% commission to the sellers. And I'm just kind of chuckling because I know a secret. The buyer's agents are not excited about this because they're not going to get paid very much. Would you go to work if you didn't get paid very much? If they said, okay, well, you've been getting paid $30 an hour, and now we're going to make you figure it out on your own, or maybe we're going to pay you $10 an hour. How hard are you going to work? Not very. Yet the buyer's agents are out there working with the buyers. So are they going to go and show this agent's property where they're not going to get paid? Well, maybe if it's the only thing available, but it's only going to be shown after everything else in the marketplace where they get paid for their efforts, where they get paid to work. So why do I say a 7%? Well, pay them more. So D.R. Horton knows that in that market, every agent that knows about this is going to call every client that they have and say, hey, you know something? They've got some pretty cool products over at D.R. Horton. Maybe we should go take a look at that while we're doing our home tour. What do you think? Same thing with your house. So when I say a 7%, I look at it and say 3% for the listing agent, 4% for the buyer's agent. And oh, by the way, those that understand the technique will tell you that they guarantee that their process will work. Now, I'm not an active real estate agent. Yes, I have a license. I don't sell real estate. I lead a lending team. I understand this because I study it. Let's go on. Josh, I know we're running over. We'll catch it up in the next segment. So here's the issue. If this agent that was doing a 4% thinking they're going to double end it, they're the only one marketing the property. No buyer's agent is. They're the only one showing the property. The buyer's agents aren't excited. And yes, some people will find it through the syndications. And we'll be talking more about that in the days and weeks to come as to where people are actually finding the properties they want to buy. Because it's not all finding it on their own on the syndications, according to some studies that have been done. I digress. Now, on the 3%, the listing agent's getting 3%. They're offering the buyer's agents 4%. Now, if you get offered a 0 or a 1 or a 2, are you excited as a buyer's agent? Well, we've been running on average 2.6 lately in California. So if you're getting a 0, a 1, or a 2, you're not excited, by taking a pay cut. You're going to show the properties because you still need to get paid something. But if your agent, if you're selling your house and your agent is advertising to the other agents in the county, in the community, that they're going to pay a 4% commission. Again, we're competing with zeros, ones, and twos. Do you think the buyer's agents are going to flock to your house? Now, what happens when they flock to your house with their buyers? Every buyer that they bring there, they're going to look at it and they're going to say, okay, yes or no. But when they start bidding on the property, and if it's done right, you're going to get a lot of bids. Again, you have to do this the right way. But if it's done right, you get a lot of bids. When you got a lot of bids and you only have one house to sell, what happens? The price goes up. Economics 101, supply and demand. And we can show numerically how the seller is going to net out more money after the commissions than if they went with that 4% agent. But people like to get cheap sometimes, and they don't realize that maybe they're cutting off their nose. I'm again going to suggest to you, if you want to maximize the sale price of your property, rsrsalesmax.com. I'm sorry, that's wrong. rsrlinks.com/salesmax. rsrlinks.com/salesmax. If you don't have somebody in your area that's offering you 4%, call me. I'll explain the entire process to you. And if you like it, I'll put you in touch with an agent that will market your property the proper way. All you have to do is give me a call at 800-306-1990, 800-306-1990 if you want to maximize the sales price of your house. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, helpful negotiation tactics for today's housing market, understanding common types of debt, and how to avoid growing debt. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. What do we have? Borrow Smart, I think we've got here. Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. Understanding common types of debt and how to avoid growing debt. Debt can feel like a heavy burden, but understanding the different types of debt and how to manage them can help you stay financially healthy. From student loans to credit card debt, here's a guide to common types of debt and tips to avoiding growing debt. Student loans. Student loans come in two main types: federal student loans, which are backed by the government, and private student loans, which are offered by banks, credit unions, and other lenders. Number one, federal student loans. These loans typically have lower interest rates and more flexible repayment options compared to private student loans. They also offer benefits like income-driven repayment plans and low forgiveness programs for certain professionals. Second, private student loans. Private student loans usually have higher interest rates and fewer borrower projections compared to federal loans. They're a good option for filling the gap between financial aid and the cost of attendance, but should be used wisely. To prevent student loan debt from dominating your life, budget carefully. Prioritize loan payments and explore income-driven repayment plans or loan forgiveness programs. Communicate with lenders if you face financial hardship and seek guidance from financial advisors. Credit card debt. Credit cards are a form of revolving credit, which means you can borrow money up to a certain credit limit and pay it back over time. If you don't pay off the full balance each month, you accrue interest on the remaining balance. Credit cards often have high interest rates compared to other types of loans, which can make it easy for debt to spiral out of control if not managed carefully. To avoid credit card debt, pay off balances in full each month. To avoid interest, it's a myth that you need to carry a balance to build credit and set a budget to limit spending. Avoid maxing out credit cards and avoiding making only minimum payments. Monitor spending regularly and prioritize paying off high-interest debts first. Car loans. The interest rate on car loans can vary depending on factors like your credit score, the length of the loan term, and the types of vehicle you're purchasing. Car loans are typically secured by a vehicle itself, which means the lender can repossess the car if you fail to make payments. Cars lose value over time. So it's important to consider how much you're willing to spend on a vehicle relative to its long-term value. Common mistakes with car loans include not shopping around for the best interest rate, taking out loans with lengthy terms that result in higher overall costs, and failing to make extra payments to pay off the loan faster. Additionally, some people underestimate the total cost of ownership, including maintenance and insurance, leading to financial strain. Hey, don't forget, car loans, you can refinance those too. So a lot of people don't realize that. Personal loans are typically unsecured, which means they are not backed by collateral like a car or house. Personal loans often have fixed interest rates, which means your monthly payment stays the same over the life of the loan. Lenders usually require a credit check to qualify for a personal loan, and your interest rate will depend on factors like your credit score and income. Common mistakes with personal loans include borrowing more than needed, neglecting to compare interest rates and fees from multiple lenders, and not understanding the terms and conditions of the loan. Additionally, some people use personal loans for non-essential expenses, increasing their debt burden unnecessarily. It's also common to overlook the impact of the loan on overall financial health and fail to create a repayment plan. Tips for avoiding growing debt. Number one, create a budget. Track your income and expenses to see where your money is going each month. Set spending limits for different categories like groceries, entertainment, and transportation. Prioritize essential expenses like housing, food, and utilities, and cut back on non-essential expenses where you can. Number two, build an emergency fund. Save money in an emergency fund to cover unexpected expenses like car repairs, medical bills, or job loss. Aim to save enough to cover 3 to 6 months worth of living expenses or more if you have dependents or are self-employed. Number three, pay off high-interest debt first. Focus on paying off debt with the highest interest rate first. Like credit card debt, consider strategies like the debt avalanche or debt snowball method to prioritize your debts and pay them off more efficiently. Number four, negotiate lower interest rates. Contact your lenders to see if you qualify for lower interest rates or better repayment terms. Consider transferring high interest rate credit card balances to a card with lower interest rates, or take out a personal loan to consolidate debt. Seek financial assistance if it's needed. If you're struggling to manage your debt, don't be afraid to ask for help. Give us a call again at 800-306-1990, 800-306-1990. We've got people that can help you. We can help with the budgeting. Our friend Chris Corrales can help you if you're looking at debt that you can't pay off over the next 60 days, unsecured debt that you can't pay off over the next 60 days. Chris has a great team over there that can help with that. And I know where to find them. So all you have to do is give me a call again to help you out. The Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. Don't think I'm going to have time to get to the other story I had for you, but let's talk a little bit about that debt, about what's going on in this marketplace. We've been talking about this for a long time, about the rsr2step.com, rsr2step.com. And why do I talk about that? What is the RSR2-step? It's a process for getting you out of debt. And it's not something you need to wait to do. You need to find out what your consolidated, your household blended interest rate is. When you know what your blended interest rate is, then you're able to get out of debt quicker. You're able to understand this better. So what is the blended interest rate? You look at all of your debts, not just one, not just selecting. And you say, okay, I've got a mortgage. It's at 4%. I get it. That doesn't really matter if you've got credit card debt that's offsetting that at 23%. Sorry, 22.84 is the average nationally right now. Or if you've got student loan debt that's significant, or if you've got unsecured debt, or if you've got a repossession or private student loans that are at 19%. If you've got all these things going on, you need to understand what the finances, and that's where the two-step comes in. We're going to get you a blended household interest rate. You're going to find out how many dollars you save. It's not all about interest. How many dollars you save by restructuring on redoing all of this. Then when you redo it, we put those dollars towards the principal. So we start immediately knocking out principal. What's happening at the same time? We've paid off all those debts. So your FICO scores should be improving as long as you participate and don't go out and spend money crazy. So now you've got your FICO scores increasing, your mortgage balance is decreasing, you got rid of all of that debt, you're able to sleep at night, you're not fighting with your spouse as much, and oh yeah, most people are forecasting that interest rates are going to drop. If that happens, we do it again. We go and redo the loan at a lower interest rate to help you save even more money and increase the amount that you're accelerating the payments on your loan. So now instead of a 30-year loan, you're maybe at 17 or 18 years of payoff. That's called financial planning. That's why we are certified liability advisors. And we help people with this all the time. And we're going to talk more about that liability advisory role as the days and weeks go on. And we ask, as always, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.